Hello, everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, it was a short week of trading this week with the 4th of July holiday on Monday, so stocks were still up nonetheless, but we'll take a look at that in the economic mechanics section here. Wanted to give a quick shout out to Rob in Tampa Bay, Florida. Thanks for calling the show and supporting the show, Rob. And Rob called in wanting to go through the IBD 50 like I did with Alfonso last week and determine how we go about picking the stock for the portfolio. So we did. We spent a couple hours together and went through that and a bunch of his other stocks that he had, as well as his 401k. Got a special way of grading 401ks by analyzing the top 10 holdings in the funds, because that's where most of the performance comes from. Anyway, that's another topic. We're going to begin with our IBD 50 portfolio. And we look now at our holdings going into this week. In first place last week, it's GT Solar. Starting out this week at $16.18. In second place, it was Hansen Natural. Starting out the week here at $83.63. Third place, it was Netflix. Starting out at $267.99. And Biogen survived the portfolio last week, and it's starting out at $108.50 this week. And Bridgepoint Education is a new addition to the portfolio. We picked up 83 shares of that stock. Alfonso helped pick that stock out. We're starting the week here at $25.57. Got a total of $11,831.63 in the portfolio. That's a little better than an 18% gain as we started out with $10,000 on January 28th. One of these stocks, the worst performer, is about to get sold. Let's see how we did. And our number one performer this week, coming in first place, it's Netflix. And Netflix started out the week at $267.99 and closed the week at $295.14. A total gain of portfolio of 10%, 10.13% in this stock, or $271.50 on only 10 shares. That was a big move this week. Let's take a look at the chart. And on the chart of Netflix, down below, 0.1, the stochastics have reached into overbought territory and they're trading sideways. We gave it a yellow mark. Above that, 0.2, MACDs are reaching higher too. Histogram bars are also lifting up higher, so we gave this one a green mark. And up top, 0.3, Relative Strength Index is trending higher, and it's starting to reach into bullish territory here, so we gave this one a green mark. And our number two performer this week, coming in second place, it's Bridgepoint Education. And it's the new addition to the portfolio. Way to go, Alfonso. Opening the week at $25.57, it closed the week at $27.25. And it had a total gain of 6.57%, or $139.44. Let's take a look at the chart. And on the chart of BPI down here, 0.1, we can see the stochastics. They extended themselves in overbought territory, and they're starting to slip a bit here. We gave it a yellow mark. Above that, 0.2 shows where the MACDs have been lifting higher. It looks like they're losing a little bit of steam, and the histogram bars have leveled off a bit, so we gave this one a yellow mark. Up top, Relative Strength Index has reached into overbought bullish territory, but it's starting to curve down a little bit too, so it's weakening a bit. We gave this a yellow mark. And the number three performer this week, coming in third place, it's GT Solar. And GT Solar started out the week at $16.18 and closed the week at $16.51. Total gain in the portfolio of 2.04%, or $55.44. Let's take a look at the chart. And on the chart of GT Solar, you can see we had some nice gains earlier this week here in a short week and gave it all up on Friday here as we got hammered. Down below, 0.1, the stochastics have been in overbought territory, but we just got a kind of a bearish signal here as the black line crossed over the red. Still in bullish territory though, so we gave it a yellow mark. It's going to be close though, as this one is probably going to turn red early next week. And above that, 0.2, the MACDs. Well, there's a little bit of steam here, and histogram bars have given up. So we gave this one a yellow mark, as it's still in positive territory, but watch it closely for confirmation on those stochastics. Above that, 0.3 relative strength index is dipping down a little bit here. It's lost its momentum and gave this one a red mark. And that only leaves room for one more stock in this portfolio. One of the stocks is going to remain, and the other is going to get sold. The first stock up, it's Biogen. Biogen has been pretty quiet in this portfolio since we've owned it, and it's battling it out against Hansen Natural. Hansen Natural hasn't been quiet as it's been in the top 2 for the past month. Coming in fourth place, and remaining in the portfolio, it's Biogen. And opening the week at $108.50, closed the week at $107.39, had a total loss of 1.02% in the portfolio. Total value loss of $22.20. Enough to beat out Hansen Natural. Let's take a look at the chart. And on the chart of Biogen, down below 0.1, the stochastics have been in overbought territory, and we're losing a little bit of steam here, and I've got a bearish signal, so we give this one a yellow mark. Slips a little lower, it's going to turn red. Above that, 0.2, the MACDs, they're converging on each other, and the histogram bars are dropping toward that zero line. We gave this one a yellow mark. And up top, 0.3, the relative strength index is trending lower after being in bullish territory, so we gave this one a yellow mark too. And so Hansen Natural is out of here. And opening the week at $83.63, closed the week at just $81, lost 3.14%, or a total value of $57.86. Been a good performer in the portfolio though, so glad to have it in the portfolio. Let's take a look at the chart. And on the chart of Hansen Natural, see a similar trend here. Down below, 0.1, the stochastics have been in overbought territory, and they're got a bearish signal here, and they're starting to lose steam. Gave it a yellow mark. And above that, 0.2, we got the MACDs converging on each other as the black line's moving in on the red, and the histogram bars are dropping toward that zero line. We gave this one a yellow mark. And up top, relative strength index, 0.3. See where that's in overbought territory, and that's starting to fall too. We gave this one a yellow mark. And our final results this week, we had Netflix coming in first place with a big 10.13% gain. And it's Bridgepoint Education, symbol BPI, coming in second place with a 6.57% gain. And it's GT Solar, 2.04% gain there. We were up a lot more than that for Friday. And fourth place, it's Biogen beating out Hansen Natural with a loss of 1.02%. Hansen Natural is out of here with a 3.14% loss. Got a total gain this week in the portfolio of $386.32, or a 3.35% gain. And so we get a new stock in the portfolio. And this week, our new stock, it's Nu Skin Enterprises. And Nu Skin Enterprises, symbol NUS, got a market cap just under $2.5 billion. Average daily volume just under 750,000 shares. Nu Skin Enterprises develops and distributes anti-aging personal care products and nutritional supplements worldwide. Let's take a look at the chart. And the chart of Nu Skin down below, you can see 0.1, the stochastics have been bullish for quite some time here, and they're in overbought territory, but they continue to look good. Give this one a green mark. And above that, 0.2, we got confirmation of that movement of stochastics by the MACDs as the black line crossed over the red, and they've been moving nicely higher. Histogram bars are rising too. They got a nice slope to them. Gave this one a green mark. And up top, the relative strength index been climbing higher too, so we gave this one a green mark. Also, we can see too that we just broke out of some resistance here, and we've got a new high. So this stock is looking pretty darn good. And our holdings going into this week, we've got Netflix, our first place winner, starting out at $295.14. And Bridgepoint Education starting out at $27.25. That came in second place. GT Solar came in third place, had a big loss on Friday, but still had a gain for the week, starting out at $16.51. And it's Biogen knocking out Hansen Natural, $107.39 there. And New Skin's the new addition to the portfolio. We got 51 shares of that stock, starting out the week at $35.31. We're carrying cash of $282.51, got a total value $12,217.95. And we started out on January 28th with $10,000, so that gives us a total gain here of 22%, just a little better than that. Well, stay tuned. Next, we're going to have our economic mechanics. You're not going to want to miss that for this week. We'll have a forecast for coming up and let you know what you should expect. Anyway, these stocks, they've still got to perform or else they're out of here. And we review now our economic mechanics from this week. Those of you who've been watching the show know that the economic mechanics is based on 3 key principles. And the first key principle, number 1, the US dollar and the commodities, they move in the opposite direction. And number 2, commodities and interest rates, they move in the same direction. Point 3, high interest rates, they're bearish for stocks. And we begin with the US dollar. And a look at the chart of the US dollar. On the daily chart down below, point 1, the stochastics got a bullish signal as the black line crossed over the red, and they're lifting much higher. It's bullish. We gave it a green mark. And above that, point 2 shows we got confirmation of that move as the MACDs, the black line crossed over the red, giving us a bullish signal. And the histogram bars are rising too, and they're above 0, so we gave this a green mark. Up top, relative strength index is reaching higher too, and it's also trending higher, so we gave this a green mark as well. And over on the weekly chart, things looking pretty good. Down below, point 1 shows stochastics resuming the uptrend here, and it's bullish. We gave it a green mark. And above that, point 2 shows the continued confirmations on those MACDs as the black line continues up higher over the red. And the histogram bars, they're moving higher too as they've recovered. Gave this one a green mark. Above that, point 3, relative strength index 2 is lifting higher. We gave this one a green mark as well. And so summing up the US dollar, we analyzed daily chart and the weekly chart. And this one was real easy. It's on the daily chart, found stochastics, MACDs, relative strength index were all positive, they were all bullish. We gave it a green mark. And on the weekly chart, see where we got the same thing, stochastics, MACDs, relative strength index are all bullish. Got a total of 0 red marks, 0 yellow marks, and 6 green marks for the US dollar. And we look now at the commodities represented by the CRB Index. And on the daily chart of the commodities down below, point 1, the stochastics have been bullish and they're just reaching into overbought territory. We gave this one a green mark. Above that, point 2, MACDs, we still have confirmation of that move in the stochastics, but the histogram bars have leveled off here, so we gave this one a yellow mark. Up top, relative strength index is trending higher, but the last dip here has been down a little bit, so we're losing a little bit of steam. We gave this one a yellow mark. And on the weekly chart of the commodities, down below, point 1, the stochastics, they're in oversold territory, and they're giving us a bullish signal. Want to see this lift a little higher before I give it a green mark. For now, we're going to give it a yellow mark. And above that, point 2 shows the MACDs are still trending lower. Histogram bars are also in negative territory, so we gave this one a red mark. Up top, point 3, relative strength index has been trending lower. Had a bit of a dip up on Friday here, last week rather, so we gave this one a yellow mark. And so summing up the commodities, we analyzed daily chart and the weekly chart. On the daily chart, we found the stochastics were bullish, we gave it a green mark. On the MACDs though, and the relative strength index, they were neutral, so we gave those yellow marks. On the weekly chart, we found the stochastics were neutral, so we gave that a yellow mark too. And the MACDs, they were negative, so we gave that a red mark. Relative strength index was still neutral though, so we gave that a yellow mark. This one's all over the place. Had a total of 1 red mark, 4 yellow marks, and 1 green mark. Doesn't want to make up its mind where it wants to go. And we look now at the 10-year Treasury yield. And on a chart of the 10-year Treasury yields, we see down below, point 1, the stochastics, they were in overbought territory. They gave us a bearish signal, and they're heading lower, and they're leaving overbought territory and descending, so we give this one a red mark. Above that, point 2 shows the MACDs are losing steam, and the histogram bars, they're dropping. We gave this one a yellow mark. And up top, point 3, relative strength index. Gave this one a yellow mark because it's hit a top and falling lower, but that trend is still up. If you can see that blue line moving up a little higher. So until it surpasses that, we're going to stay with the yellow mark on that. And over on the weekly charts, down below the stochastics, point 1, we see got bullish signal here as the black line crossed over the red, and it's moving higher. We want to see this one move a little higher too before we go green, but for now we're going to give this one a yellow mark. And number 2, we see that the MACDs, they stopped dropping. They're starting to move in a little bit better. They're improving, and the histogram bars are rising, but they're still below 0. Gave this one a yellow mark. Up top, relative strength index, been trending down, but we had a big lift up last week, and we lost just a little bit of steam here, so we gave this one a yellow mark too. And summing up 10-year Treasury yield, we analyzed the daily charts and the weekly charts, and on the daily chart found stochastics were negative, so we gave them a red mark. On the MACDs and relative strength index, they were neutral, so we gave those yellow marks. On the weekly chart, we found the stochastics, MACDs, relative strength index, they were all neutral, gave them all yellow marks. For a total, we got 1 red mark, 5 yellow marks, and 0 green marks for the 10-year Treasury yield. Now we take a look at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones, you see down below point 1, those stochastics are in overbought territory and they're going sideways. Seen that a lot though, and they failed on a lot of other stocks. For now, we gave this one a yellow mark. And above that, point 2 shows the MACD is still reaching higher, but the histogram bars have dropped, so we gave this one a yellow mark. And up top, relative strength index, it's too losing steam, so it's curving downward. We gave this one a yellow mark. And on the weekly chart, we see we got a bullish signal here down below on those stochastics as the black line crossed over the red. Gave that one a green mark. Above that, point 2 shows the MACDs. They stopped dropping, and black line starting to converge on the red here, so gave this one a yellow mark too as the histogram bars moving toward that 0 line. And up top, relative strength index, it's been bullish here for the past week or so and moved a little higher yet this week. But the long-term trend since January is down, so we gave this one a yellow mark until it breaks that. And summing up Dow Jones Industrial Average, we analyzed daily chart and the weekly chart. On the daily chart, the stochastics, the MACDs, and the relative strength index were all neutral, so we gave those yellow marks. On the weekly chart, the stochastics were bullish, so we gave that a green mark. MACDs and relative strength index were neutral still though, so we gave those yellow marks. And for a total, we had 0 red marks, 5 yellow marks, and 1 green mark for the Dow Jones. And so we've been analyzing the US dollar, the commodities, 10-year Treasury yield, and the Dow Jones Industrial Average, looking for where the strengths are and where the weaknesses lie. We did that by analyzing what the number of positives were against the number of negatives and coming to a conclusion that way. And this week, first place, clearly it was the US dollar, surging into first place, recovering from last week. Got 6 green marks, 0 yellow marks, and 0 red marks. And in second place this week, it's the Dow Jones Industrial Average, as we had 1 green mark, 5 yellow marks with no red marks. And the commodities came in third place, a close third, as we had 1 green mark, 4 yellow marks, and 1 red mark. And it was the 10-year Treasury yield, as interest rates are falling again this week. We had 1 red mark, 5 yellow marks, and 0 green marks. Interest rates fell decisively here on Friday, so they were trading sideways for the early part of the week, but now they look like they're heading a little bit lower. And we look now at our market gauge here. The object is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory. And this week, clearly, it was the US dollar in first place. It's far in the right column in bullish territory, jumping out of fourth place spot last week. We had a big rebound here. Dow Jones Industrial Average was neutral this week, but was slightly positive, so it's moving into bullish territory. We're going to watch this one close as we enter into earnings season. It came in second place. And the Commodities, CRB Index, it was flat neutral. We couldn't see where this one's going, as it was 1 red mark, 1 green mark, and everything else was neutral. So we'll see this week where it's going to head. It was very close to with 10-year Treasury yields, and we know 10-year Treasury yields and then commodities move in the same direction, so we're going to watch this closely as we move into this week. Also going to watch the US dollar, because I think if that moves continues to move higher, that's going to put the pressure on the commodities, and I think that'll push it toward the bearish column, and I think that'll carry the interest rates lower too. Well, that's all from our show this week. Tune in again next week and we'll do it again. Feel free to call if you'd like to talk about some personal education opportunities here and how to apply these strategies to your portfolios, or analyze your 401k using some of these economic principles. But for now, I'm out of here.